And welcome to the £5 Challenge. This is where we invest £5 a week into individual stocks which the community on the Sensible Investors Forum can pick, or it's just random ones I find on the market. This is where I can break it down to you and you can find out how you can research and how you can get into investing with just £5 a week. Hello and welcome to the £5 Challenge. This week we're talking about BAE Systems Ticker BA.L. BAE Systems provides defence, aerospace and security solutions for all around the world. The company operates through 5 different segments, first being electrical systems, then cyber and intelligence, platforms and services, air and maritime. BAE Systems is currently a FTSE 100 company. They currently operate through the industrial sector under aerospace and defence, and they almost employ about 90,000 people. Now, one of the first things I like to look at when researching a stock is the PE ratio, and this can determine whether at first glance it looks over or undervalued. Now if we look at BAE, we have 12.54. For the industrial average for that sector, it's 12.63. So we can see from this is that it's quite an average stock. It's in the middle of all of it. Another good way of researching whether a stock is under or overvalued at current valuations is the PEG ratio, the PEG ratio. So we can see here in 2020, at the end of the year, it was 5.2. So when we look at the PEG ratio, anything under 1 indicates an undervalued stock, and anything over 1 is overvalued. Now this is because we take into account the growth of the earnings per share. As we can see, it's struggled a bit for the last year. It's only gone up 2%. So at current valuations, we're paying a lot of money for the growth of the company, which kind of indicates that this may be a little bit overvalued at current valuations. The good thing to look at when looking at stocks is, does the stock even beat the market? So as an investor, we can buy ETFs which track indexes like the S&P 500 or FTSE 100. Now with Yahoo Finance, they compare it against the S&P 500 as that's one of the most common indexes investors try and beat. Now we can see over the last 52 weeks, which is a year, BAE's only returned 0.99%, not almost 1%, compared to the S&P 500, which over the last 52 weeks has returned 44.45%. That is a huge contrast, and it's massively underperformed the index. So is it really that good of a stock? Now we move on to profitability and management effectiveness. As we can see, the profit margin is 6.74, so it's not that huge. I like to see a stock with over 10% profit margin because that gives them a little bit of a leeway. Normally you'll find with stocks with such a low profit margin, they're in more of a competitive area, which we will find with the aerospace and defence sector, as most of it's government contracts, so there's not a huge amount of money in between it. Now moving on to the dividend. I really like the look at this. See, as you can see here, the forward annual dividend yield, 4.67. So that's really, really attractive yield and quite nice, especially if we look at the payout ratio. Here, we can see the payout ratio is 57.28. Yeah, it's on the higher side. Normally I like to look for stocks which have a payout ratio about 60% or under. But this is on the very end of it. But with such an attractive yield, it shows that not all the money is going out on the dividends and they can reinvest it back into the company. So I'm quite happy with the way this looks. Now they are a biannual dividend stock, as we can see here in a second. Here we go. So they do a final and interim dividend. They've actually increased this recently from 13.8 pence per share to 14.3. So this is payable in June, and then we should expect another one in November. So after the last year, they've actually been quite strong, and you would kind of find that with aerospace and defence, as it's almost a staple for any government. Now if you have a quick look at the balance sheet, what you can see is they have quite a bit of cash on hand, 2.78 billion. But compare that against the debt, which is 6.91 billion. They've almost got, well, just over 2 times the amount of debt to cash. So for me, this is at the very, very limit. I like to see companies nearer like net neutral, so they have the same amount of cash as to debt. And then moving on from that debt bit, we can look at the current ratio, which is 1. So when it comes to the current ratio, anything under 1 means that they haven't got enough assets to cover short-term liabilities. So this is a little bit of a worry. This is only just covering it. Something definitely to keep an eye on. It's a bit of a flag that you want to keep your eye on as an investor. Now here's an interesting little thing I found when doing the research into the stock, is how much of an industry weight BAE Systems has in that sector. They currently account for 46.3%. That is a huge amount. After that comes Rolls-Royce with 25.2%. So BAE Systems has a huge amount of market in where they are. So they are one of the juggernauts and industry leaders. That's quite impressive, the amount of cap they have. Now I just want to bring your attention over here to recommendation trends. Now this is where analysts give their performance ratings on what they think they're going to do to stock. So currently we have 20 analysts rating this, and 12 of them have them as a buy or a strong buy, with another 6 has them as a hold. So a little bit of a mixed bag. Optimist, I would say, and I'd say the same. It's not a fantastically great stock. It's very much a dividend stock, especially with that yield. Now at the moment, ESG investing is a massive thing and it's making waves through the investment community. So I thought I'd add the ESG ratings in for the different companies. Now, at the moment, ESG Rating Risk for BAE Systems is 34.3, so it's on the higher risk. You would expect this because it is an aerospace and defence company. It's not going to be the bee's knees when it comes to protecting the world, though in one way or another it is. But you see here in the aerospace and defence sector, it's 26 out of 89, so it's not doing too bad. It's about average. Globally, yeah, almost 10,000 out of 13,000, you know. It's not going to be the best, as you say. So as you can see here, for our management, the average, they actually have a really good ESG report on their website, and it's quite interesting how they're trying to balance it out. Being an aerospace and defence company, they're actually doing really, really well. As you can see, their exposure is high because of the industry they are in, but they're managing it with a good management team, so that seems really, really good. So just moving on to some recent news for BAE Systems. Recently, they are collaborating with Plug Power to create hydrogen-powered buses. Now, this is quite interesting to see where they go with this, because this is a little bit out there for them. This isn't their traditional market, and it's definitely an expanding market. So we have Tesla with electric cars, but there's not so much news about hydrogen. And this could be a very good way in for BAE to expand of what they really do, because they're primarily aerospace and defence. So it'd be very interesting to see where they go with this one. Talking about aerospace and defence, they've recently proposed for a new government contract for the US for their armoured vehicles. So it's one of our biggest defence companies here. They've submitted a bid to supply the US Army with new armoured vehicles. This is one that they've done before, and they think that they're going to have quite strong competition from some US companies and German companies also. Now they've done this a little bit differently, because normally you'd supply the blueprints of what you want to make beforehand, but the US is asking for concepts now, so they're trying to change up the game. So it'd be very interesting to see what happens with this. It is quite an expensive contract. Yeah, so it's 45 billion it's worth. So that's going to be very good for BAE if they actually get this. Now, one of the worrying bits of news coming out is that they've had to pay one of their chief executives £2 million to try and keep him in his place. Now, why would they have to do that if it's such a great company? It's definitely something I want to keep an eye on. It's a bit worrying that they have to try and pay someone to stay, so yeah, you have to definitely see where this one goes. Following that news, we're looking at insider buying and selling. You can see over the last 12 months there's been a bit more of buying than selling, with £341,000 brought compared to £235,000 sold. So it's a bit of a mixed bag. There's no real indication of insider confidence, so it's nothing too much to worry about unless there's got more selling on the way. It's definitely something I'd like to keep an eye on for insider confidence. As we can see with BAE Systems, it's a bit of a mixed bag. Over the last 5 years, as you can see here, it's not really done much. It's been a bit of a stale stock. Yes, we get a very nice dividends, but do not expect a huge amount of growth from this one. Especially see from the insider buying and selling. Again, mixed bag. We've got people buying, people selling. And I don't think it's really one that you're going to get a huge amount of growth from. As you can see, they had to pay their chief executive to stay. So I think it's just one of those stocks which is going to be slowly plodding along. You're going to get a very nice dividend yield. Yes, you're going to get paid for holding, but you're not going to really see the returns. As we've seen, the PE ratio is about average. the PEG ratio quite high because there isn't a huge amount of growth. So it's just a bit of a bland stock. So you're being just rewarded for holding a stock with the dividends and not much else. I believe though I can appreciate that they have got such a big industrial weighting out the whole sector. I just think they're very bland. They can't really innovate what they're trying to, as we can see with Plug Power. But I think they've reached that they're just a juggernaut in the area and they can't really push much more, especially for their size. I just want to say thank you for taking the time to watch this video. If you'd like to have the write-up and see all the links, then go on to sensibleinvestors.co.uk, and this is where you'll be able to find all my different research for every stock for the £5 challenge. Thank you for listening. Please give a thumbs up and subscribe, and I'll see you on the next one.